I think it's going to be ongoing. Thanks very much for being here. Sorry for the sound difficulties here. So excited to have you. So you're with Formation 8, which is a young but very rapidly emerging hardware VC firm. But interestingly enough, one of your early hits as an investor was Oculus, so a hardware investment. Why don't we start just telling us a little bit about yourself, your background?
Sure. So originally from Israel, an entrepreneur. I did my own company in 2008, sold it to Cisco in 2012. From then, joined Flextronics and run their innovation team and investments and incubator and creating Lab 9. And recently joined Formation 8 to take lead on the hardware investments.
Okay, very cool. And so what did you do at Flextronics?
Basically run the whole corporate ventures incubator, creating something we call Lab 9 today, that basically is the hardware incubators, and manage worldwide innovation team.
Okay, and does Flextronics still invest, and if so, at what stage? So if I'm a hardware entrepreneur and I'm interested in working with Flextronics, when does the corporate investment come in?
Yeah, I mean, from strategy perspective, we decide together with the board to shift a little bit from direct investments to be more as partners, and basically reroute most of the budgets to Formation 8.
Okay, so Formation 8 now has a hardware-specific fund.
Can't comment on that.
Okay. Tell us about, I guess, the stage at which you guys invest.
Sure. So we have a pretty. I mean, our main fund is at 500 million, and our previous fund is 450. So we have about $1 billion under management. We are doing everything from seed to early growth. So we're starting at big seed. So we're not doing small checks, usually a couple of hundreds of thousands of dollars to, I think our largest check was $50 million.
Okay, great. So you've been in this space for a very long time. Tell us, what you like, what you don't like, what you think is hot, what you think is overplayed, what you think is emerging.
Sure. Actually, can you ask the questions you asked again on GoPro?
Yeah. Is GoPro a software company or a hardware company?
Absolutely software company. And I don't know if you guys, I personally know Nick, and I read the whole S1 as well. And S1 is the documents that you're filing IPO. And in the documents was zero mention on manufacturing, inventory, PCBs, CNCs. It was all about we are creating the largest content in the world. Actually, they predict that by 2016 they're going to have more data upload than YouTube. So we are investing in software companies that have hardware element. We are not investing in hardware companies standalone. I believe that it's moved from the world, and any of the companies that will come to my door and don't have a strong software as part of the core founding team usually will have a hard time with it.
And what's interesting about GoPro, while we're on the topic, is that they're very much a community as well. Is that something that you think about?
Yeah, I think, again, community is a great way to, of course, differentiate yourself. And again, community is a software thing, right? It's, of course, not a hardware thing. I definitely think that the models became more and more sophisticated, and we see the subscriptions and the freemium and premium moving more sitting on top of hardware. And I think, as all of us know, doing hardware, the barriers went down dramatically, so we see much more hardware. And I think somewhere this combination between a lot of software, some hardware, and some services, business model on top of that, this is the future of companies that we're interested to invest in.
Okay. So lots of things here, and we'll go into all of this. But in terms of, so I understand the general angle, but in terms of specific areas, do you like home automation? Do you like, 3D printing? Do you like industrial internet? Do you like all of those things as long as they have those characteristics?
Yeah, I think in general we are pretty generalist in that regards. We do like to invest in what we things that are moving the offline world to the online world. And I think there is a lot of things that today are offline, like that, trash cans, that moving to be online. And there is a really interesting combination between a lot of things that needs to be done in order to empower that. And yes, your car became connected car, and your watch became smartwatch, and your body became connected, and the hospitals became connected, and the home became connected, and all of this emerged into being interesting and investment pieces for us.
Okay, so to help us put this in context and understand how you think about investments, again at a specific level, maybe take 2 or 3 of the hardware investments that you guys have made and help us understand the investment thesis behind the decision.
Sure. So yeah, I mean, Oculus, of course, is a pretty famous one, and we engaged with Oculus from the seed round, and I think for us it was, it's an amazing thing. It's an amazing thing. It's worth for us $500,000 just to play. So we write a check for $500,000. And then when we met them in the Series A, it was more about them. It's actually a software play. Yes, they have you know, the headset VR, it's great, but they're all about software. The team is heavily software, and it's the language that we know how to play. And we wrote a $10 million check. And then in Series B, we wrote an even bigger check. So I think for us was exactly what we like. We help them a lot on the manufacturing. We connect them to Samsung, and through our relationship, they got basically the new display, the flexible OLED that allowed that you know, get rid of the dizziness that they had, and also valid the deal with Samsung on the gear. So I think it's definitely an investment that we like. Another company that I can think, I mean, yesterday I wrote $1 million check to a company that actually does not exist yet. And they came with a presentation. So no prototype, nothing. But they had like unbelievable, top-notch 3 founders, heavily robotics experts, coming from Willow Garage, developed the ROS. And now they are developing a new generation of a robotics OS. Literally coming with a presentation, and we wrote the checks on blank.
So you guys did what? Scully helmets, you did Jibo, Allspace VR. Just any? So some of those are fairly recent, right? Jibo was a few months ago.
Yeah, we did probably about 10, what you call hardware investments in the last 3-4 months. So we're pretty active.
Okay, so pick one of those and walk us through how you thought about it.
Sure. I can take Scully because we saw in Scully is doing a smart motorcycle helmet with a heads-up display.
With augmented reality.
Yeah, with heads-up display, transparent. And we felt very similar feeling we had with Oculus. Super strong team, a lot about software, a lot about the platform. We wrote a small, kind of what we call small check, $1 million, just to play. And when we watch those guys growing, and hopefully they will be for us our next Oculus.
Okay, same with Jibo. So Jibo is this new sort of like home robot that interacts with a family that was started by an MIT professor.
Yeah, in general, we have a big thesis around robotics replacing human. Everything from manufacturing to missions that are less complicated. We think that the human is actually a very complicated machine, and robots can do a lot of things that we should not do. And I think Jibo was one of those examples. We have a couple of other robotics, but basically how we can drive robotics for replace or to add to our day-by-day missions. I mean, we talk about here on the cooking companies that Brady did, same things.
So one theme that keeps coming back is team. And it's something that every single investor will say. I guess from an entrepreneur perspective, sometimes it's just a little discouraging because it sort of feels like if you haven't sold a company for $1 billion exactly in the space, nobody will want to talk to you. How do you think about that? How do you, I guess, other than those amazing founders with a track record, how do you think about the type of team you want to see in a hardware startup in terms of complementary skills and what you want people to have done?
Yeah, actually, I don't have the numbers, but I will say that we're doing a lot of first-time entrepreneurs. When I say team, it's not necessarily should be someone serial entrepreneur that sold 5 companies. It's great, but we're doing a lot of. And the guy that I mentioned yesterday that I wrote $1 million check for him, it's a first-time entrepreneur. And the reason that I really like the team, and the guys talked a little bit about it. I don't believe in teams that are outsourcing work. And I think as much as you can do in-house in early stage, you should do it in-house. And if you need to get another co-founder and give him a little bit more equity, do it. Any knowledge that you are basically doing in outsourcing, it can be mechanical design. I mean, maybe the only thing I will agree is an industrial design, but besides of that, embedded, mechanical design, electrical design, firmware should be done in-house. And when we are meeting a team that we see like it's really end-to-end, let's put this team in the room and they can develop most of the things by themselves, this is where we are getting interested.
Okay, so let's talk about the financing path. So it's really, so hardware is this, in a way, new thing, right? Because hardware entrepreneurship had pretty much disappeared for like 10 years or so. And so it's coming back and everybody's trying to figure it out. And what seemed to work last year, so you did a crowdfunding campaign, then you did a C, then you shipped, then you did an A or something like that. Actually, you didn't ship, then you did an A, then you shipped. All of this seems to be changing all the time. So where are you now, and like what do you see as the path in terms of what interests you guys?
Yeah, we say it's become a software valley, not Silicon Valley anymore. Now it's coming back again. Well, I'm happy. I think healthy financing looks today like anywhere from 500K, what I call pre-seed. I'm talking about really good companies. Then a seed that looks like $2 to $3 million. Then A that looks like anything from 6 to 10.
And so when does that happen? When do I do my seed? When do I go to work with Brady if I'm lucky enough to be accepted into IO1? What do I do?
I think it really depends on what you're developing. If it's a pure consumer product, something that falling under the Kickstarter or pre-ordering umbrella. Usually, I will want to see you for pre-seed almost when you are launching the company. I will want to do a seed somewhere around after your campaign, and I want to do an A to scale up basically second generation, so real mass production. So seed will finance what I call NPI, then A will finance the mass production. I think if you're doing something in the robotics space, let's call something that is more on the B2B side, usually we want to see the team, in pre-seed, we want to see some sort of a proof of concept or a prototype or something that looks like your, PVT, DVT or something like that in the seed, and then we will do an A to take you to a production.
And do I want to do a crowdfunding campaign? So you mentioned if I'm a building a consumer product, that may make sense. But it's like this funny thing that happened in financing, where all VCs got excited about crowdfunding because, from the investor perspective, it sort of de-risked the whole thing. It's like, hey, look, there's tons of people that want that product, and then I think a lot of people sort of learned that actually it might be a false positive. But how do you think about that?
Yeah, I must admit I'm not a big fan of crowdsourcing in general. Definitely prefer to do pre-order from your website. If it's necessary, I don't see, again, it's my 2 cents, I don't see a huge value using crowdfunding, and for me crowdfunding is not validation to anything. Recently, I don't know if you saw, but Puya going bankrupt, and I think they did $6 or $7 million in Kickstarter.
Even more, I think it was 10.
And attract Kleiner and other people to pour in money. So for me, it's not validation to anything.
Okay. Any interesting lesson learned across your companies, like stuff, let's start with production. So you mentioned some of this, but anything that, each time you see a company doing this, you're like, no, please don't?
A lot. So I'm spending a lot of time on the factory floors. This is my passion, so tons of my time in Zhuhai and Shenzhen. You can just see the difference between super technical team that did most of the DFM by themselves compared to someone that outsourced that and get the slap when he see first time the SMT machine shooting PCBs. I think probably my biggest lesson learned will be try to do as much as you can by yourself. Try to stay local as much as you can.
Stay local?
Yeah. So try to push it as much as you can. If you can get some the EVT, DVT, PVT somewhere here in the US, and there is a great factory that the labor in Austin is not necessarily much higher than the one in Shenzhen. Try to do it here, especially if you are not extremely technical that have a manufacturing experience.
Interesting. Interesting. So I guess last question from me, and then I'll open up to people. So on the retail side, what have you seen work and not work? Because it's this funny thing that like you have a hardware product, and those products need to be actually sold in stores, and it seems very often to be an afterthought for entrepreneurs to actually go to Lowe's or go to like Home Depot or like Target or any of those guys.
It's actually fascinating. I spent some time yesterday with the Amazon CTO. This whole industry of retail is totally, you know that it's changing. But I think it's now in the second wave it's changing. And I see the e-commerce guys, the Amazon of the world, and the JD.com of the world, and the Walmart.com of the world, signing a deals with startups that I never saw in the last 5 years. Meaning taking inventory on their balance sheet, no returns, spending marketing dollars, doing the customer support, paying upfront. So what probably I'm telling you, it's a pretty good news. It used to be, the e-commerce killing the physical store, so they are killing also the startups because they don't have competition. I think now they feel that also their margins are getting squeezed, and they became much more aggressive. So I think for us as a startups, we have a better opportunity to not have this rule. I'm never raising venture capital money to financing capex. So don't give equity to finance inventory. There is other mechanism for that, and I think you touched a little bit about it. But there is venture debt, and there is banks, and there is manufacturing that can give you a credit line, and there is the e-commerce guys that are willing today to finance more and more inventory. Don't give equity only for OPEX needs. Of course, it's a rule of thumb, but I trust this rule.
Great. Do we have questions?
I'm curious if you ever dealt with any startups which require regulatory approval, like approval, for example, and how much of a risk you view that as?
Yeah, we just invested in a company in Chicago that are doing FDA 510K class 2. I'm not afraid of FDA. I think actually the FDA is getting much more soft, especially with the whole digital health mechanism. And today you basically can get a lot of data before you're going to the FDA and come to the clinical test with a lot of basically data that you already collect. So I'm feel pretty comfortable with that.
Can you just talk more about maybe what you're kind of thinking about crowdfunder.com or maybe crowdfunding sites and how they impact some of the startup financing?
Yeah, I think the really good startups can get money from VCs on any stage. So I think any other platform mechanism usually will be to startups that are maybe missing something, either in the team, either the value proposition, and the problem that they are trying to solve. Not big fan of those platforms.
Thanks. Terrific comments. So both you and Wade, your top-level view, your insight, what's possible in terms of vendors, so on and so forth. Apart from the money that you offer, which of course is very important, how much time are you able to make available to your investments? And what in fact do you make available to your investments?
Yeah, I think you're asking great questions because it's much broader questions around our industry as venture capitals. It's not enough to write checks anymore. The really good companies can get money, it's commodity. I think our value is, okay, cool, yeah, I can get $5 million, what else you're going to give me? I think at least in our case regarding what we did, we brought a lot of strategic investors to our fund that we are leveraging, like Flextronics, like Johnson & Johnson, like LG, like Samsung, like Lenovo. And basically we are leveraging their muscles to helping the startups. either in the manufacturing, supply chain, go-to-market, channeling, commercial deals. Besides of that, I am personally, thanks God, it's my passion, I'm spending a lot of times with the companies on the technical stuff, help them hiring engineering, help them doing their first batch, negotiate for them credit line terms with manufacturing. It's not perfect. Unfortunately, I cannot do it for any of my startups in real times. But I think we as an investor, if we are not going to do it, we're going to stay with the dogs.
Great. So if we don't have any more questions, it's actually a great moment to switch. So thank you so much for being here. This was great. Really enjoyed it. Thank you.